This is the Southside School of Financial Freedom Watch List and Market Report for the week ending October 3rd, 2020. Our question this week is, what is spoofing the market? The answer will be provided later in the video. The market does one of three things every day: it goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways: economic outlook, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week, the market was up. The Dow Jones Industrial Average decreased minus 0.48% on Friday, but was up 1.87% for the week. The S&P 500 decreased minus 0.96% on Friday, but was up 1.52% for the week. The Nasdaq decreased minus 2.22% on Friday, but it was up 1.48% for the week. Looking at the week, we can see that the three indices were up on Monday, Wednesday, and Thursday. They were down on Tuesday and Friday. That was 3 up days versus 2 down days. The market ended the month of September down, but managed to finish the week up. The new unemployment claims were 837,000 versus 850,000 expected. Continuing unemployment claims were 11.8 million, a nearly 1 million decrease from the prior week. Congress and the White House still haven't agreed on a new pandemic stimulus deal, but the House of Representatives did pass a $2.2 trillion stimulus bill. The presidential debate was held and flabbergasted everyone. The president tested positive for COVID-19, and JP Morgan Chase was fined almost $1 billion for spoofing the U.S. metals and treasury markets. Which brings us to our question of the week. What is spoofing the market? When it comes to the metals markets, specifically gold and silver, spoofing is when large financial institutions submit buy and or sell orders with no intention of those orders ever being executed. In short, the orders are submitted to manipulate the prices of the metals. After the price moves in the desired direction, the orders are canceled. Think of it as someone at an art auction bidding the price higher on a piece of art with no intention of ever buying the art. The gold and silver markets are the most manipulated, that is, they are the most spoofed markets in existence. Yes, it is illegal to spoof gold and silver and other markets, but it is done all the time. New unemployment claims, congressional actions and inactions, congressional bills, political debates, the president's health, and corporate fines for manipulating markets are all news. And news drives the market, good and bad. Day-to-day predictions of whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be are large banks and other large financial institutions. These large market players will do what they must, including spoofing the gold and silver markets to drive the stock market up. Do you own any stocks? If not, why not? Are you afraid that the stock market will fall and it will lose value? The stock market will fall. After all, the month of September, the S&P 500 fell And even though the market recovered from its pandemic lows, it has gone back down a bit. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down or sideways. How do I do that? I apply the Southside Trading Strategy. You can learn more about the Southside Trading Strategy at southsideSchoolofFinancialFreedom.com. Here is my trading watch list for the week ending October 3rd, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Datadog, ticker symbol DDOG. It's in the first column. It increased 14.16% for the week, though it was down on Friday minus 0.86%. Datadog is a software technology company that provides cloud-based monitoring analytics and integrated and automation of technology infrastructure for various businesses, including other technology companies. I did not have a trade on it this past week, but I have traded and generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside Trading Strategy. The Southside Strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of October 3rd, 2020, my portfolio is outperforming the S&P 500 Index ETF SPY. Year to date, my portfolio is up 16.2% versus 9.71% for SPY, a difference of 6.49%. I am beating SPY by 6.49%. This week, equities, including puts, calls, and ETFs, make up 62.74% of the portfolio. Cash is 37.26%. The cash flow generated for this week was 1.46% of the portfolio account value. The account value changed by plus 1.54%. Meanwhile, SPY changed by 1.57% this week. I sold option contracts on 8 positions this week, 6 calls and 2 puts that range from $124.01 to $301.68. I also received a dividend payment of $120. You can get more details, including the total dollar amount of cash flow for the week, on the website SouthsideSchoolofFinancialFreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the SouthsideSchoolofFinancialFreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on Lulu.com and Amazon.com. Please like, share, subscribe. ADOS, ADOS.